when they see a glimpse, is it going to be too late?
Yes.
Yeah.
Once you see the glimpse, then it's already too late. You have to take a leap of faith.
Take a leap of faith.
And see the future before it even happens, before anyone else sees it. So you can buy it cheap. That's what investing is.
Your portfolio, you got Solana, you got Ethereum in terms of crypto.
Mm-hmm.
That's the only two from memory?
Yes.
Yeah.
I used to have Cardano, but I did in the bear market. It was just like less than 0.5%. So it was taking space without any reason. But Solana, and don't get me wrong, I'm not a crypto guy, and I bought Solana at the worst possible time in 2021. I bought it at 110.
As a peak, when everything was peaking, 2021.
I think it was like the peak, and then it was like a dip, and I thought I bought the dip. I thought I bought the dip, and I got killed like in the 2022. But because my convictions on Solana, like the technology and the speed and all that, I bought so much of it in the bear market. That's why I'm up now on Solana, and it's my highest conviction peak. And I invest in cryptos the same way I invest in stocks. I want to be concentrated bets, so I don't want to have like too many projects, too many stocks. I want to be on top of them. That's how I like to do it. And so I'm taking big bets in. So it's 10% basically two coins, Ethereum and Solana.
Yeah. Okay. So it's like in terms of how you invest, would you say that, when you do invest in something, it's equally, you look at like the fundamentals and also the psychology of it, or you simply, are there certain ones? Because obviously like your top ones are like
my top positions are UNH, which is healthcare.
And LV.
Yes, LVMH is up there. I have I mean, it's basically boring. So I have a mix of my portfolio. It's like a mix of exciting stuff and boring stuff. But I'm a macro guy, so I want to see the big picture. So to put it in different words, like I want to see the big picture. I want to see like for example, healthcare. I know healthcare is going to be an industry that will be around in whatever the economic environment. Like people will need healthcare until we all die. So that's a company that I would choose to invest, and I don't have to babysit them too much. I don't have to watch like they go up, they go down. So and I take big bets on my top positions, and as they go lower, they're much smaller. So I invest more into my highest conviction picks and less my lowest conviction picks. Now you may ask, why do you have lowest conviction picks? Why do you invest? Why do you bother invest? Because you're going to take risks somehow. You want to be able to take a risk. But you don't want to take a risk with 10% of your money. You want to take a risk with 2% of your money. And if it goes well and doubles, then you get something out of it. And if it goes to zero, you're not getting killed. So that's my risk management behind it. And I can justify it with stocks because they are moving in a more predictable way than crypto. With crypto, I'm sure you have a different way of doing about it because they behave differently than stocks. But yeah, my top positions are, obviously healthcare. I have some semiconductors. I like banking, financials. I like technology. So that's the mixture I'm comfortable investing.
Are there any ones that you feel, whether this, and the next question is this a good thing or a bad thing? And I have my own opinion on it. It's like ones that you are emotionally attached to. You have it simply because you're emotionally attached to it. You know, do you have any of those in your portfolio?
I'm not emotionally attached to them,
Yeah.
but I have a good understanding of them. So
Mm.
most of the companies are like, I came across them because I lived in the US for so long. So most of the
Yeah.
companies I'm personally familiar with. And
Yeah.
so, okay, so let me ask you your question a different way.
Mm.
It's only because I only have a small amount of positions of stocks, I can get
Yeah.
to know them more personally
Better.
than,
Yeah.
than if I have like 150 positions and it's just
Yeah.
simply looking numbers and making decisions, which is nothing wrong
Yeah.
with that. It's just not the way I do it. So,
Yeah.
so now if you put a gun in my head and ask me if I'm personally, not that you put a gun in my head,
Yeah.
but I'm just putting the scenario out there. If you put a gun in my head and ask me which one do you love, which ones are your
Yeah.
favorite, I'm
Yeah.
gonna have to say JP Morgan, like the
JP
bank.
Morgan.
JP
Yes.
Morgan, it's my very first position when I started the portfolio in 2020, and
Yeah.
it's still in there.
Yeah.
That's one of it. Amazon is another one, is
Mm-hmm.
because I was working in the e-commerce sector when I was in the US. And what
Mm-hmm.
Amazon does in the e-commerce part of the business, it's almost
Mm-hmm.
impossible. It's
Mm-hmm.
like the way you can order something and you can have it the next day, and you are like
Mm-hmm.
2,000 miles away, you can get
Yeah.
it the next day. It's just like it's like magic. Okay.
Yeah.
The
Yeah.
logistics, the 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 amo- the logistics expertise they have is just second to none. So
Mm-hmm. Mm-hmm.
they're much ahead of the game. And then they introduced the cloud, which is another part of the, but that wasn't the reason. It wasn't the cloud, it was the e-commerce that got me
Mm-hmm.
into Amazon. So to answer your question, yeah, I'm a bit attached to a couple of my positions, but
Yeah.
no mistake, if they need to go, they have to go because it's not just my
Yeah.
money. I have my
Yeah.
colleagues have to consider their interest as well. That's another
Yeah.
thing that makes the whole thing more complicated. Would you say? Once
Yeah.
once it's
Sure.
not just you, it's just like you have other people responsible.
Yeah. Yeah, exactly. And that obviously plays a huge, you know, pressure as PIs. But you know, just to not just to consider yourself, but also, you know, the hundreds or thousands of copiers that are just that their money is going to be affected as well.
Yeah.
You know, and you know where I was going with that is that I guess, you know, I have seen, and I have been, you know, I have experienced this as well. It's just like, how does, you know, the ego play a part in your holdings? You know what I mean? Like, I've seen people or spoken to a few who simply cannot let it go, even though they know that essentially the fundamentals might not be there. There could not be a future, but there is hope. There is hope there, or they're just like emotionally attached to it. But and that in for me that links to like, you know, like somewhat like stubbornness or ego as well. Like I have conviction. I said I need to be right, you know. I have seen that a lot. I have experienced that in my early years investing in something I learned, you know, even though I I have, you know, I'm confident about an asset, I have conviction, I still need to, you know, remember that it's an evolution. Life evolves, you know, so does, you know, asset classes and markets, and you know, as an investor as well. It's just to be open to evolving and say, look, you know what? I've got to let that go. And, you know, for me as well, you know, I enjoy playing poker. So I always try to apply that to investing, and learn when to hold them, learn when to fold them. And I do see and have experienced, you know, people just having the holding, you know, assets, positions there simply because of an attachment, you know. And that's why I wanted to ask you whether you've experienced that before. And I guess really, you know, how to go about that, if there isn't even an answer to that at all.
About having an ego and not changing your way.
Yeah. Yeah.
So there's a thin line between ego not changing your ways and being patient about something coming. So
Very true.
some people that they just follow your portfolio, but they don't know how you think about the companies or or the coins, they're going to say, okay, or okay, let's speak about myself. They're going to say, okay, has an ego and doesn't want to sell Rivian. That's that's my position. That is the mod in the red, which is like a small cap all the way down portfolio. Doesn't really matter if it goes to zero. But so is it ego, or is it I'm just waiting for it to start? And I believe there's a fine line between the two. Are you waiting for something that could happen?
Yeah.
Or you just wishing something will happen?
Yeah.
Or you just being an egomaniac and you say, you know what, I'm right, and I know more than the market, and I'm just holding, and I don't care what happens. I guess if you're managing your own money, you can do whatever you want with your money. But once you have the responsibility of managing other people's money, you have to put I mean, what do they? I mean, you play poker. What do you say? You check your ego at the door. Is that how it goes at the?
Say again.
So in poker, they say you check your ego at the door.
You check your ego at the door.
Yeah, or maybe that wasn't for. Maybe that's not for poker. Maybe I'm just making a mistake.
I'm not sure. Maybe it sounds familiar.
Maybe it's for a different game.
No, there's a lot of ego when it comes to, I mean, you do need, I mean, there is a fine line between ego and confidence as well.
Yes.
Or arrogance, confidence. You know, you do need, I guess you do need to have a little bit of that. Well, whether you term it ego, whether you term it confidence, but you need a little bit of that to be able to be in the game.
Now that you say that, I believe you have to be confident to take risks.
Yeah.
So if you're not confident as a person, you don't have any confidence, you're not gonna risk, you're not gonna take like huge risks. So where that carries over to arrogance from confidence, that's obviously a fine line. But it's like, I mean, this is a business we are in. We are here to take risks because other people simply will take them and they trust us with their money, so we can take it for them. That's basically what it is. So if you lack that risk-taking ability or confidence to take risks, then what are you doing?
Yeah, exactly. And I want to also clarify that the risks that us PIs or investors are taking is not going to the casino and putting, your money on like black or red. You know what I mean? It's taking calculated risks.
Yes.
We take risks in everything, or you can say that starting a company or a business, being an entrepreneur, is taking there's a lot of risk there. You're buying a house, you go into real estate, you're taking risk there. Any decision you make in life, you are never 100% sure that it will, unfold, like it will turn out well. So there's always an element of risk, and obviously there are varying levels. But I always like to clarify when I speak about investing, especially to people who aren't investors and want to get into it. They're like, well, isn't it risky? Like, aren't you gambling? And I'm like, well, no, it's calculated risks, and you've got to be smart about it. You got to have the research there. You've got to have the knowledge there. And then you add in the conviction, then it then creates that conviction and confidence. And then you press buy or you short it. It depends on what investor, what type of investor you are. It takes a lot of confidence to do that. And it comes with time. It comes with experience, Yeah.
So let me ask you this, because it's a question that I get. It's something I'm thinking about a lot, and I want to take the take on it. Because you're in crypto, and you have said many times that you do well in volatility. So when you do well in volatility, it means you have to buy into volatility.
Yeah.
So before you buy into volatility, like the market is down, like the crypto market is down 10% in a day or two, and then you see yourself buying. Do you think that, because sometimes I think like when I'm buying deep into the red, I'm thinking, okay, like hobbyers, now they're gonna think I'm crazy because I know I'm doing the right thing, but I try to put myself in their shoes, how they would
Yeah.
feel if this random guy that I'm copying is just buying Solana when Solana is down 15% on the same day.
Yeah.
So
Yeah.
do
Or
you think
more
about
than
that as
that.
well?
It can be more. Yeah. Sorry?
Do you think about that as well? Do you think
Oh, yeah. Yeah.
not so much like I'm talking about the optics, how it looks from the outside without knowing like what you know?
Yeah. You know, I mean, like, there's being an investor and there's being a popular investor on eToro where you're managing, you know, the funds of thousands of people. So there's like so much more pressure. And in those circumstances, you know, where Solana is down 15, 20, even 30%, when you're just literally watching it free fall, one thing I've learned in terms of that, the first crash is never the first one. There's always another one. So learning to be patient and just waiting for the right moment. You can never pinpoint it. As they say, you know, never catch a falling knife. But you know, you have to try with experience, you try and gauge the moment to buy as close to the bottom as possible. And to handle a situation like that with copiers is to, yes, you're thinking about all of these people judging you, or you know, they're going to come and they're going to be angry or not. And it's important to, when you are confident, to make the move and buy the dip, to then communicate it very clearly to copiers and explain, you know, why you're doing it, and just being transparent. You know, one of the things for me as a PI is to be, and I've always said it, you know, in my posts, is honesty and transparency and good communication is key. You know, it's key to being a popular investor. I apply that in life in general as well. You know, with any connections, friendships, you know, family. But you know, for me, copiers are essentially like, you know, they're my friends. They're a community to me. And so it's important to have that transparency and that communication with any move that you do. One of the worst things you can do is just, you know, sell, buy, without communicating that to copiers.
Yeah, I do. I share my trades like in real time. Like as soon as I buy something, you got the chance to, you have the option to share it. So
Yeah.
or trade, buying or selling. I don't use leverage or short sell. So when I'm buying or selling, I share everything, and then the same day or the next day, I'm just gonna make a post and explain what I was doing, and I will give them. But when it comes to stocks, they take a hit for a major reason sometimes. They're a bit more rational than crypto. Crypto just can drop like 10% for no reason. And you have to be okay with that if you want to do well. You have to be able to rationalize that irrational behavior. So let's say JP Morgan misses earnings estimates and it goes down 1%. I'm going to buy that day. And then I'm thinking, okay, so these people now, my copiers, they see that JP Morgan missed estimates, and I'm there buying the stock the same day. So I'm trying to put myself in their shoes, how they see me, if I'm nuts or I'm just like taking. But you have to pick your spots when you're buying, and because with crypto, well, you have to pick your spots. When are you making your bold moves? And it has to be into bad news. You have to be into fear to. Yeah. And most people don't have the stomach for that, I think. Do you agree that
Yeah, for sure. For sure. You know, I've always said that, firstly, like, you know, really going back to crypto, it's the crypto world, it's a beast to be reckoned with. You know, you need an iron stomach to be able to trade, to be able to invest in crypto. And when you start, and I absolutely can relate to, you know, people who are beginners in it. And that's why at the moment I say I thrive in moments when there is a market crash, because I've had that experience of multiple crashes. It's just I just actually lost my trail of thought. So yeah, having an iron stomach and being able to just like reassure everybody that it's really going to be okay. It's not the end of crypto. You know, Bitcoin isn't dead, which is what everyone shouts, you know, out loud when that happens. But yeah, it takes a lot, you know, it takes a lot to just invest in general. But crypto is really a beast to be reckoned with. And in the beginning, I've had moments where, as people can understand as well, you feel really sick in the stomach, you know, as you watch the market free fall. And you know, and going through so many deep crashes, nothing really phases me, you know, honestly. On a red day, if Ethereum is down like 10%, I'm like, okay, you know, good opportunity, but see how it goes. These days, like this, you know, nothing really phases me. And it's just, all I see is opportunity, and that's really it. But I don't want to really just like waffle on, because I do want to touch on a few other topics, because you made a comment just then, to rationalize the irrational.
Yes.
Yeah, so I've read a few of your posts, and you know, honestly, I'm actually a big fan of your writing. It really resonates with me, and there are a few pieces that I really enjoyed reading. And one is, don't tell me what you think, tell me what you have in your portfolio. And I absolutely resonate with that. So can you tell everybody a little bit more about that?
Yeah. So the thinking behind that post was,
Yeah.
so you and I were both popular investors, and we like we read the feed. We read the feed, and you read some people they talk or they write with some strong convictions.
Yeah.
The good thing about eToro is that I can click on your portfolio and see your positions and see what you're holding and what you're
Yeah.
short selling and what you are long and what you're short. So sometimes you see people say something and you go look at the portfolio and the portfolio says something different, because
Yeah.
where your money is what your convictions are. So if you have 20% in Bitcoin, so I know you have to tell me you believe in Bitcoin. So the portfolio can speak values about someone's appetite, about
Yeah.
taste in what market they like to invest. Is it stocks? Is it ETFs? Is it US, Europe, China? So if you look at my portfolio, you're going to see large companies in the United States. So
Yeah.
it makes sense right there. And sometimes it can make sense, and sometimes it doesn't make any sense at all, because you're going to see people with all over the place. They have like something from everywhere and in
Yeah.
currencies, and that's
Yeah.
almost like trying to decode what that means. But in most cases, you can look someone and look their portfolio, and you have a good idea what kind of appetite they have, what is their vision of the future, and basically how they see the world. That's my opinion.
Yeah. So do you think it's important then, you know, everyone's got their own strategy, you
Yes.
know. Do you think it's important to be, you know, when we're talking about that, you know, your portfolio is a reflection most of the time of who you are as a person.
Yes.
So do you think it's important to stick with like what is true to you, you know, like being genuine, and that obviously leads to like conviction and confidence in what you invest in. So do you think that it's important, you know, that the portfolio is true to who you are to some extent, not 100%, but to some extent? Like obviously there are some that just like they're just there for other reasons.
Yes. Yeah, I would say, yeah, your portfolio should reflect to who you are,
Yeah.
and you invest with your conscience, and something doesn't look good to you, you don't agree with the politics, because your
Yeah.
politics somewhere or another affecting your decision making. So investing
Yeah.
with your conscience is important, and your portfolio will reflect that. will reflect that, or will reflect that you don't have an opinion. Because you can be into all kind of stuff, and you can just do money, which is fine. But and I wrote that post after we came back from London, because in London, when at the eToro summit, I was meeting people that I met for the first time, and then after I met someone, let me go look at his portfolio. I'm just curious because I just talked to the guy, and he's a really nice guy. He was telling me about whatever, and I want to see the portfolio, and I'm like, okay, now I get it. So it was almost like a confirmation of the person I just met looking at the portfolio for some weird reason, and you can see Europeans have certain stocks in their portfolio, and Australians have certain kind of stocks in their portfolio. So there's a connection. This is not random. So culture and environment and the geography in which you live and work and your family has everything to do with your investment choices.
And that's very interesting.
Yes, and if you look enough portfolios, then you can just see a portfolio and basically guess what the person is like, where he's from or she's from. So looking portfolios is interesting because it's not something that you can be taught in school. This is like an eToro thing that as a community, and we talk about stocks, but I can go into your portfolio and see see your positions. This is not like something that other people do. This is just like for us. This is like an eToro thing. And sometimes I'm talking with my friends and they might look my portfolio and they see something I added to it without telling them. Like they come and bring it up and they're going to ask me, oh, did you buy that? And I say, yeah. I say, why? They know before I even tell them. So that transparency is quite something.
I think a lot of investors or PIs after listening to that are going to go into their portfolio and go, who am I? Like have this like midlife crisis and find out so much about themselves, and all the introspection is it's definitely key. Investing isn't about beating others at their own game. It's about controlling yourself at your own,
That's completely psychology. That's psychology 101. It doesn't get
101.
It doesn't get more basic than that. I mean, first you have to keep your emotions in check before you even try to go compete with someone else. Is basically what it is. So and it's important because even though you can tell me you can have 10 times more experience than me about the subject, and you can tell me and promise me that something is not going to happen, but if you don't believe it within inside you to make the correct decision to hold or to sell or to buy, then you're losing in your own game. So you have to win in your own game and then go try to compete with other people. In a sense, I don't know if how I'm describing making sense, but
it does.
I mean, go ahead.
No, go ahead.
I was going to say it's completely psychology. Like a lot of it is psychology, and not only controlling yours, but once you're doing a good job controlling yours, then you try to see what other people's psychology are and take advantage of that. That's the next step.
Sure. Absolutely agree with that. And I guess that's just one of the key, when people say, what's what does it take to become, a great investor? What are the top three? And, obviously that would be one of it, is like controlling your emotions, which is in a very broad sense. Now, obviously, with our conversations, it tends to go on for a very long time. So I'm going to try and touch on like probably one or two more questions, which I'm very interested in your take is, and I'll probably have like a separate, episode on this, but females in investing, you don't see a lot of them, of course. We're still trying to, you know, attract more females, especially on eToro, to become investors. What from a male's perspective, you know, what is your take on females in investing and the struggles that they would face in the industry?
So there are not that many of them right now, and 4 years ago when I started, there were like even less. So, but they keep coming into the platform, and the women have been in the financial industry sector, but not at this, like on the eToro, the way we do it. I think it's 90% men and 10% women, but I think it's less than 10%.
Yes, less than 10% on eToro. Well, in terms of, I think Popular Investors, there's only about 7%, I think.
Oh yeah, so it's less than 10%. So as far as struggle, I think so men and women have like advantages and disadvantages, of course. But there are some women on this platform that they know exactly what they're talking about. So if you're a good investor, it shouldn't matter if you're a woman or a man. I mean, it comes down to merit. So if you know what you're doing, if you know what you're talking about, it shouldn't be matter. It shouldn't be matter if you're a man or a woman. More women need to take the opportunity and try and invest for themselves and try to achieve financial freedom, of course. Why not? That should be available to everyone, and women even more. But my experience, like, there weren't many women at the summit, but the women I talked to, each one of them, they were like extremely smart and know exactly what they're talking about. So, and I'm sure there are many more women that they want to join the platform. And
for sure. Definitely. And
there are women that they have stats that some people can't even get close to. Okay, because it comes down to start. I mean, you have like a 50 plus, you have two or 3 years of 50 plus like return. I mean, for people that don't know, getting 50% on anything on a single year, it's not a walk in the park. It's quite difficult. Okay, so sometimes people can't put it in context because they don't know too much about investing, but investing is difficult in general, especially if you want to be a good investor. But in my experience, women are doing quite well on eToro. And in the future, when more women join the platform, then eventually probably the PI summit is going to be 50-50, 50% men, 50% women. I have no doubt in the next 5 or 10 years that will be the case.
Yeah, that would be amazing. Obviously, that's the goal. You know, obviously I have experience as a female investor, and it's tough. You know, it's obviously a male dominated industry. When you get into it, there's a lot of self-doubt, and I think that obviously comes from society in general. And I was very fortunate to take part in to be a part of the Women in Investing session as part of the eToro Summit. And there was a lot, it was just such a great, we didn't have enough time, obviously, to really talk, all of us. But I think one thing that really stood out is, you know, obviously confidence in ourselves is very big, being in male-dominated industry. And we're always selling ourselves short. We're not confident. We see the results. You see the results, but you're just like, women tend to be, you know, when you congratulate a woman, generally, women will be like, yeah, you know, oh, I got lucky, or I had a good team, or I had a good mentor. And then if you, at times, congratulate a male, they'll say, yep, you know, yeah, I did it myself, you know, and that's great, you know, and women should be more like that. They should be more like, of course, you know, like I did it myself. But the other thing is, like, you know, imposter syndrome is it's very big as well. And I'm sure it's both females and males,
Mhm.
they have their own take or their own, you know, perspective on that subject. You know, imposter syndrome, you become an elite, you know, popular investor. And for many years, I still don't feel it. I don't feel that I am an elite popular investor. It's only until as of late, and obviously part of being at the summit and getting to know everyone and being a lot more involved socially as well has really helped, and great conversations with, you know, people who are just like incredibly intelligent, such as yourself, has really boosted that confidence. Like, hey, yeah, that you know, you're right. You know, I really do know what I'm talking about. In a sense, you know, there's still much I need to learn, and will continue to learn. But that imposter syndrome, you know, feeling like a fraud, despite your results, despite being an elite, despite being whatever it is, it plays such a huge part. You know, have you ever experienced feeling like that? And do you think that that is more female or equally female, male, or?
So obviously, I don't know. I could never understand the female psychology
Yeah.
in the aspect of investing. But what is good about investing and trading and like markets, the performance, it is what it is. The numbers are what the numbers are. So
Yeah.
if I can't get good returns, it doesn't matter. But so getting the numbers right, getting your returns on point, that should be enough reason for anybody not to feel like an imposter.
Yeah.
That's the way I see it. And what was that part of the question?
Well, you know, imposter syndrome, you know,
Oh, yeah.
do you think that it relates more to women or equally to male and female?
No, it was in the beginning, I thought maybe I didn't feel like as an imposter, but I felt like, okay, maybe I'm just lucky. Maybe I just caught the right thing at the right time. So am I lucky? Because I'm always trying to be reserved and
Yeah.
not be too confident and get in trouble. So sometimes you have to second guess your own. Am I lucky, or or this is just ability? So you have
Yeah.
to find a way to separate if it's luck or if it's ability. In the other hand, if you're having a long enough track record, you can be lucky only so much. I mean, even
Yeah.
the plug is right twice a day, but it's not right it's not right all the time. So you can get lucky every now and then, but at the end of the day, for someone to become a popular investor, I mean, they don't make anybody. You have to have you have to show something. You have to show some good results in
Yeah.
order for other people to copy you and trust you
Yeah.
with their money. And
Yeah.
it go back to the Kobeers. It's like sometimes we don't want to believe in ourselves, but people that don't know us just see a little picture on the platform. They are
Yeah.
trusting you with their money. So
Yeah.
so in a sense, someone has more faith in us than we have in ourselves.
Very true.
And so if that's not enough for you or for anybody or for me or for anybody to feel like not to feel like that, then I don't know what is. And speaking about women, my favorite investor on CNBC, she's a woman, Stephanie Lin. Stephanie Lin,
Right.
she's her strategy is like similar to mine, but she's the only
Yeah.
one that makes sense on CNBC, like in the afternoon when I watch it when the market is open. And I told Hakeem like so many times that Stephanie Lin, I would love to get her on the podcast, by the way. I don't think she would.
I think you will. You will. Unless I get to her first.
And she makes perfect sense. And our portfolio and strategy are similar because I follow her and I follow her on social media as well, because when she talks, she's not talking any nonsense. So I would say that people that are smart and they want to see the bottom line and they can look beyond a man and a woman, they're gonna see where the value is. And if a woman can bring the value, then I'm all in for that woman. So that's the way I feel about it. It's about ability in the end of the day. And but you have to give the opportunities, though. You have to give the opportunities for more women to join. And I believe eToro is doing a good job giving the opportunities.
You also, as a part of, building that confidence, it's just like, taking that leap of faith, saying yes to everything. When people ask me that my journey, it's just, how did I build my confidence to this point? I wouldn't say I'm 100%. I don't think anybody is completely, it's varying levels, but I would say just feel the fear and just do it anyway, which is one of my favorite books. It's just, you feel it, if you're scared, yes, just take it, and then just take that leap of faith. Be okay to feel uncomfortable, be okay to be asked really difficult questions, but then also be okay to say, like, you know what, I don't understand. I don't understand. Can you tell me more? And that's just a part of learning. If you don't keep that ego in check and stubbornness in check, you're not going to grow in general. You're not going to grow as an investor. You've got to be open to be flexible and adaptable to changing environments, knowledge as well. And so I think all of that, taking in all of that has really helped, me be who I am today, right now. And one advice I would say is just take that leap of faith and do it. Worst case scenario, you're just not good at whatever it is, but put yourself, sit at the table, understand that there is a seat for you at the table, with everybody. And then the more you do that, and the more, summits you go to, the more podcasts you do, the more interviews or whatever it is, then that imposter syndrome and that lack of confidence will slowly fade. That's what I think. And, just to wrap it all up, any advice, in general for investors, top 3 key things to becoming, either more confident or, better at investing, anything that is relating to psychology at all, like any advice.
So there is no substitute for experience, unfortunately. And is this your third cycle is this your third crypto cycle that you're experiencing right now?
Yes.
Yes.
I think so.
So
Yes.
there's no amount of money that is going to make you feel the experiences of seeing the same things over and over again. So so experience, there's no way around it. So you're going to have to spend time in the investing, in the trading. You have to see the ups and downs, which is basically, I'm saying, you have to be patient, and you have to give yourself some time. Don't give up like too early. You're gonna have to try again and again. Because when I started, and I started prior on eToro, and my goal was to beat the market. And if I can't beat the market within 2 years, then I'm just going to invest in the market and just get the market returns. And I gave myself 2 years, and if I lose $10,000, $20,000, at least I gave it a try. But I didn't give myself 3 months. I mean, what are you going to do in 3 months? You have to give yourself some time, and you're going to have to invest the money and invest the time, because it's time consuming, and you know it. And so give yourself time, take a leap of faith, and so that's number 1. Number 2 is psychology, and you're going to have to control your emotions. And the way I do it is, when something goes wrong, I try to go for a walk and think it over, instead of making a decision right there on the spot. Another stupid rule I have is I never trade on the phone. I never check
Okay.
my phone. So yeah, I
Yeah.
have to be home in the TV behind me with
Mm.
my laptop in front of TV, like watching the markets and doing it on the
Yeah.
laptop. I don't want to
Yeah.
be impulsive somewhere at a random time of the day and just start trading
Yeah.
on the phone. That's how you get sloppy. So
Yeah.
you have to give yourself time to think it over. Maybe sleep on it.
Yeah.
Try to think clearly.
Mm.
Number 3 is take it slow.
Mm.
Don't borrow money to invest. Just invest, just risk a portion of what you have.
Yeah.
If you get
Yeah.
lucky, don't rush throwing
Mm.
a lot of money in it. Take it slow
Yeah.
because I think there is a value in starting your portfolio from a little bit of money and then
Yeah.
making it larger. Let me give you an example. I grew my portfolio from a few $1,000s to what it is now, and because it took some time to get it what it is, okay,
Mm. Mm.
I start with a lot of money. I don't even see the dollar amount anymore. I only see the percentage.
Mm.
So if I'm down 1%, I'm not gonna say I'm down like thousands of dollars. I'm saying, okay,
Mm.
I'm down 1%. So I don't even see the dollar amount. I only see the percentage. So I'm down
Mm.
1%, no big deal. But
Mm.
if you throw a lot of money at once,
Mm.
then the amount that you are up or down will might trick your mind.
Mm.
I don't know if you ever, I don't know if you ever
Yeah.
considered
No, that.
this point of
Yeah.
view.
Yeah.
So, so starting slow and taking it slow, and maybe taking a year more than you would like to achieve your goals. I think it's a good.
Mm.
I think it's a good thing.
Yeah.
I mean,
Yeah. For
good,
sure.
good things take time. You can't just rush. So basically, basic stuff is not. I'm not reinventing the wheel here. It's just like basic stuff.
Yeah. It's like, keeping your composure and not rushing into things so quickly.
Yes.
And that's a part of, keeping grounded. And then obviously that relates to like the, fear, greed, FOMO, all of that. Just don't rush into it, especially if the market crashes, don't rush into buying.
Mm-hmm.
There's most definitely there's going to be another one the next day. Just wait for things just to cool off.
Mm-hmm.
And then that's a part of like yourself, just cool off, don't panic, go for a walk, listen to some Coldplay.
Yes.
And so yeah, and just keep your composure, because once you can have that logical, you remove the emotions and you can then think more rationally and logically and go, okay, what should I do now? So just don't be impulsive. Keep your composure and don't be compulsive.
Yes.
Pretty.
Yes,
Yeah.
it's important, and it sounds very basic, and some people they're gonna think that we're not saying anything. But if you know
Yeah.
about markets, that's basically what it is. It's basically
It's
everything.
it's easier said than done,
Yes. Yes.
easier said than done. In theory, that's what, but it's so much, we're just human.
Yes.
We're just human. Hence why we're having this conversation about psychology. We're just human.
Yes.
We're not AI, but or are we? Look, we'll just wrap it up there because we have run over time as usual. So we'll conclude the episode there. So thank you so much for taking part in this, and it's just been a pleasure having you. The quality of the conversation always is amazing. So if anyone is looking to copy Demetris on eToro, we'll put a link to his portfolio to this episode. And if you're looking for someone who looks at the bigger picture and wants to make good money, then copy Demetris. So thank you, Demetris, for taking part.
Thank you for having me.